All right, trading related video. This one's a mind wrestle. So you'll apparently I say bear with me a lot. I apologize in advance for the amount of times I say it. So it's just because I made a video because I don't use charts. I do not use stop losses. I do not use technicals. I do not use fundamentals to trade. And there's something else I don't do. I'll explain what I do, and then the opposite is what I don't do. I approach the markets, in my mind at least, from a business perspective. What the hell are you talking about? Well, when I fund an account, that money for me is written off. So if you put in, I hate throwing out numbers because I want it to relate. Yeah, I don't want it to be, I'm not going to say 2,000 because that's ridiculous. 100,000. You might be like, well, that's ridiculous. Let's just go with it. If I was starting a business, e-commerce, pub, shop, I'd want 100,000. It's a number. So 100,000 for me, once I put it in the account, it's working capital for me. That's all it is. It's in essence gone. Right off that 100,000. That is your working capital. For me, this is how I treat it. Again, I think this is very different to how most traders treat their trading. And for me, I've come at it this way because basically it's a mind management technique to not lose faith, which in trading is very easy to do. So you put in your 100,000 and first trade, you lose $1,000. For me, I haven't lost $1,000. This is the mind massage. Because I've already lost 100,000, my working capital is just down 1,000. Now, if I make 2,000, I have realized from my working capital, I've realized 1,000. Okay, so, and that 1,000, because it's outside of my working capital, can never be touched. All my future trading, I treat it as segregated profit because it's realized real profit, and that's how I work my trading. So if the value of my working capital goes down to 50,000, just as an example, but I haven't closed the position, I haven't realized the loss. But let's say for some reason basically my NAV, it's basically my NAV is 50,000, and my NAV comes back to 60,000, and because I manage a portfolio, I take off one of the positions at a profit, even though I'm negative 60,000, let's say, on a NAV basis, because I've realized a profit on a trade, I strip that profit out and put it in my realized P&L. So I'd now have the 1,000 plus whatever that trade made. If I close a trade at a loss, that gets taken off the 1,000 whatever. So I don't know, let's say I made 1,000, then I made 100, then I lost 100. I'm the both realized profits and realized losses, I segregate. And my working capital for me, it's gone. It's puff of smoke. So only when I've realized 100,000 will I be profitable, because I've written off my working capital. It's a different mindset for trading, and it enables me to ignore, because I'm managing a portfolio, not ignore, but I disregard the net asset value, because for me, I've already lost that amount. I hope that's making some sense. You might get it in 2 seconds and all make sense, but I think for a lot of people, they'll be like, what? So I use my working capital to generate profitable trades and loss trades. And once I've realized both a loss and a profit, that gets bucketed separately. And then let's say I generate enough, because I then want to think of it as free cash flow. I'm free to do what I want with that cash, no matter what status my working capital is at. So I might choose to withdraw it, or I might choose to cut it in half, put half back in, and use half for expenses. So my working capital then expands by the amount I've put back in. And my segregated bucket of realized P&L is, I'll keep a tally of it, but some of it you can put back in if you want to compound. So how does this look in practice? Well, because I manage a portfolio, I have a long bias, few hundred positions. Naturally, it does look, some make, my NAV looks like the SPY, a mixture of the SPY with the Russell, with the Qs. It's an amalgamation of all of them, because I have a bit of everything. Because I have a few hundred positions, it's a real mix of them. And then what I find, I'll then show you. So my daily, each bar is my daily realized profit and loss. So you'll see most of them are positive. And I know that freaks me out as well. Don't judge me by the way I do this. You'll see there are a few 0 days and a few slightly negative days, but how I trade means that I generally take off. If I have a big loser, again, this is just managing, this is mental gymnastics. If I have a big loser I want to take off, I take it off on the same day I have a big winner. So that it's important to paint green. I don't know where I've got it from. Historically, every professional I've followed wants to paint a green number. If they're painting a red number, they are not happy. So the way I've learned to trade is to try and paint green. And so, yeah, if I'm carrying a loss and I have a big up day, well, both are coming off and I'm painting green. So that's how you can print. Well, that's how I like to print my P&L. I've taken off the scale because, again, it's all relative, but you can see it's a fairly consistent number with a few spikes. So my biggest day to the right-hand side, this line over here, this was that massive bar 2-3 weeks ago on the rebound when the Trump tariffs kind of got reversed or put at 10% or delayed 90 days, whatever it was. So that was actually my biggest green day ever. And then just historically, yeah, I just generally try and paint green most days. And I don't really know what to say about it because I put this out there because I don't think YouTubers trade this way. I don't think they look at the markets this way. I think they're one shot, they're all or nothings on single underlyings. I'd like to manage a portfolio and I try and have green days. And this is where I get to in trying to achieve that. How this looks when you stack up, I'd then like to stack this up to check my edge. And this is how it looks. Again, I've taken off the scale. If you've seen my Cambridge presentation, Cambridge University presentation, that's UK Cambridge, not Cambridge, Massachusetts. I posted a P&L chart on there. I've recently, not recently, last year sometime, that spreadsheet was getting a bit clunky, a bit slow, so I started a new one. And this is now my realized profit and loss chart. Again, this doesn't include NAV because, like I said, I disregard my NAV because for me, I've lost all that already. That will always remain as working capital in my mental gymnastic model of trading. So the interesting bit for me, and this is why I follow this, is that it's a fairly straight line. And then you can see this where it flattens out. That is the bear market. So I manage a long portfolio, but I obviously had some positions that were profitable in this bear market. So I was still able to print green on a realized profit basis. And then as we recovered, that has kind of horseshoed back up to get me back on that line, which is nice to see. So at this moment in time, because I always want to check my edge, whether it's degrading or getting better. And I'd say it's pretty consistent, which is the aim. So it was just the main point, I guess, why I posted this is because it's nice to see during a bear market that you're still able to print green, and that when you get the recovery, you catch up to your P&L line. And for me, my aim is to print this like line. So I'll just flick back to that one. That line is made up of these numbers. It looks like it wouldn't, because these are, quite jagged. You got, the big spike here, big spike here, big spike here. But once you tally them all up, that these numbers, or these daily numbers, are this. Again, the main shock for me is that I don't have more red days. And again, it's just my mental gymnastics of taking off losers on big day winners. So obviously on the crash, because I'm long portfolio, yes, my NAV would have been down, kind of in line with the SPY. I was obviously following it, and for me, because I'm managing a portfolio, that's fine. And there were trades I could book on those big down days that still printed me green. I find it much easier to treat all deposited money as working capital, that it's gone, that you've bought a machine, and it's effectively a write-off. It won't be, because that's your working capital, but that's how, it's not a write-off at all. It's just working capital. And then the money I make, profit and loss, segregated to one side, that I then choose to either allocate back in and grow my working capital or remove for expenses. That's just how I like to do it. I hope that's kind of interesting. It's freed up my brain to ignore the NAV on crazy days, especially down days, and to then have that joy of, what do I do with this realized profit on this trade? So I think that's it. I hope that made sense. Questions, go for it. If you look at your portfolio this way, if you manage your trading this way, I'd love to hear about it. I think this is a different angle to what most post, so it's kind of why I'm making it. All right, I hope that's interesting. That's it.